Hello, this is Joanne Victoria with another edition of the Sanity Project podcast for IT professionals whose work-life balance plan has imploded. We are here to provide solutions that will help the IT pro live a sane life. Our guest today is Abby Eisenkraft. Abby Eisenkraft dishes real-life tax and financial advice in her no-nonsense and humorous approach, making tax and finance enjoyable subjects. As the CEO of Choice Tax Solutions, Inc., she is a tax problem resolution specialist. Her clients call her a lifesaver and miracle worker for solving their nightmarish and previously unsolvable IRS problems, and she has the war stories to prove it. Abby is an author, speaker, and has worked as a consultant to entrepreneurs, other tax professionals, and a tax software company. She is frequently quoted in the press as a financial expert. Her upcoming book, 101 Ways to Stay Off the IRS Radar, will be coming out in January 2017. Welcome, Abby Eisenkraft.
Thank you so much.
How are you doing today?
I am terrific, thank you. Very excited to be here.
Thank you. I would gather that you're pretty busy at the end of the year with your clients and resolving some tax issues for them. How's that going?
Well, it's definitely a busy time because now that we're past the extension part of the filing season, which ended October 15th, now the IRS is gearing up and sending out notices. And for those people who have state taxes as well, both taxing authorities are sending out notices, making inquiries, and making people a little miserable at this time of year. But now's the time that we really need to dig in and look at what's going on and do some really good planning for the upcoming year so we can legally find ways to take money away from the IRS.
Well, how will you be able to help our internet technology professionals that will help them live a more peaceful, successful, fun life?
Well, I'd like to give the listeners a couple of good ideas to do now. Then, once 1231 comes, it's all over, right? So very little that we can do. But if we take the time now to make a couple of adjustments, it could really make a huge difference in the filing season next year. And that's what we want to look at. So one of the first suggestions would be to max out that 401k. Now, everyone says, yeah, retirement savings is great. We're supposed to do that. And it's kind of a not very exciting thing until you really figure out how it works. We get to put $18,000 away max per year if you're under 50 years old. So in this case, we have the ability to take that money away, come off the taxable table, and we legally take that money away from the IRS for now. And that's brilliant. So for example, if somebody makes $75,000 and they make a $10,000 401k contribution for the year, instead of being taxed on that $75,000, they're taxed on $65,000. Now, regardless of whatever tax bracket you're in, that's a great savings. And sometimes it boils down to, well, I would have had to hand that money over in taxes or I got to put it in my pocket. And it's always better to stay with you. So it's a good thing to make sure to take a look at your pay stub and make sure that you're contributing enough. See where you're at now in comparison to what you can do and do anything you can to really max that out, because what that means at the end of the day is you will have a built-in tax break. Because you put more money in, you're going to have lower taxable income, and at the end of the day, it'll either increase your refund or lower the taxes that you do owe. Either way, it's a win-win, and we certainly want to do that.
Absolutely. Is there another tip that you have about adjusting?
We can also look at the allowances on your pay stub and make sure that you have enough tax paid in. So when we start a new job, they shove that form W-4 in front of us, and we have no idea what we're doing. We're picking numbers from the sky. We're trying to follow that little worksheet. And it's a known fact, if you follow that worksheet, you're going to owe taxes because it's from the 1950s. It's never been indexed for inflation. And the assumption there is that, especially for married couples, that there's one person home with an apron around her. And that's not real life today. So we have to look at our allowances and make sure that we have the right number. Because if it's a single person making a higher salary, you really have to consider coming down to perhaps single zero, which is the most tax withheld. What's kind of weird about allowances, it works backwards. The higher you go, the less tax you have withheld. So no one wants a surprise. Nobody wants to be sitting in front of me writing a huge check to the IRS in April, because everyone sits and cries. So the way to, and I don't want to see grown people crying. So the best thing that we can do is to be proactive now, look at our pay stubs, make sure everything's okay and in line with what it has to be, and then, it's not such a problem. Because if you have to write a check in a big chunk, that's never fun. If you take a big bill and you divide it over, most people are paid, every 2 weeks. So you take a big bill, you break it into 26 pieces, it's a whole lot easier to deal with. Mm-hmm. So that's what we want to make sure of, that we have enough withheld so the IRS is not going to be bothering us, sending us letters, sending us interest and penalty calculations, things we don't want to deal with after the fact.
I have experienced through some of my clients and other people that I deal with that when they go to payroll to change their W-4, for example, let's say they were working with you or another tax advisor, and they were advised for their family of 4 to increase from 4 deductions up to 8, let's say. And they go to payroll, and payroll says, oh, we can't do that. Now, why does payroll say that, and who gives them the right to do that, and what should you do to overcome that?
Well, the answer is that payroll, and they will tell you, cannot give tax advice. And you can change your allowances as many times as you want to, because it's up to you and it's based on life events, and the responsibility is on you. So they can't tell you that. The only time they can tell you that would be if the IRS stepped in because you've had an ongoing problem. So let me give you an example. I had a client who put down 99 exemptions, and he actually asked me what his refund was going to be. And I said to him, I give up. What's it going to be? What are they going to refund? You had no tax withheld, because with 99 exemptions, they were blocked from withholding any taxes. So when the IRS gets tired of people playing games like that, they will go to the employer and they will submit something saying, you will put this person down at single zero. You will withhold the most tax that you legally can for this person because this person's a problem. So unless they have one of those things on file, you should be able to tell your employer anything, because they're just a conduit. They don't make decisions in reference to taxes, and they really have no say. It's a private thing that each of us is responsible for, and how I'd handle it, I'd be screaming and shouting and throwing things.
Good, so, and I think more people should.
That's how it's done. So, they certainly cannot do that at all. But when we are thinking about allowances, we're not just thinking about ourselves. We're saying, okay, well, I'm one person, so I should take one allowance. We have to think about what else is going on the tax return. For instance, if you bought stock and you sold and you have a lot of gains, you're going to need extra taxes withheld to accommodate that, because no one withholds tax on stock trades. Same thing if you have a lot of interest or dividends. That's counted as ordinary income. And if we don't have enough tax withheld that's going to cover those other things happening on the tax return, then we're going to have a problem. And again, nobody wants to owe. There's a sweet spot. You don't want to owe too much. And if you're getting back a huge refund, that's a problem, because it's money that you could have had all year.
When we're going back to the 401k, you say that there's an $18,000 max per year for people under 50. Mm-hmm. to contribute to. Since our workforce is different now than it probably ever was before, people over 50 are still working. So what is the max, and is there a time frame on that? What is the max that people over 50 can contribute to a 401k?
So I'll answer that in going the other direction. Every 401k has to be fully funded by the employee by 12/31 without question, right? So once we get to January 1st, everything flips back and sets itself straight again, and we start the whole process over. In addition, the IRS does index a lot of this for inflation, and it's a constant changing event. So the catch up for the IRAs are 1,000. The catch up for the 401k is 6,000 in 2015, and we're going. So far, they said there are no changes for 2016. So, someone who is over 50 has that 18,000 plus another 6,000 that can be contributed to these plans. So it's pretty good. Again, with the IRA, it's a little bit less, but still, we have. The government realizes that many people 50 and over do not have enough, and therefore what they're doing is they're giving these catch-up provisions.
What does that mean, catch-up?
The government says, you know what, we can't have everyone be our problem when they're 70.
Okay.
So what we're going to do is we're going to give tax breaks and certain allowances all over the tax return if you understand how to take them. So when you're over 50, they're letting you contribute more than someone who is under 50 because they feel that you have to catch up to where you wanted.
Got it.
You should have been. So it's almost an insulting concept the way they say it, right? That you've got to catch up. But there are many people who sadly do not have enough saved. And if you look at the statistics on there, it's terrible. I mean, the majority of people have less than 50,000 saved, and you couldn't live on that in a year,
right? Especially
in a city. Maybe if you're off the grid, off the radar in a shack somewhere, maybe you could, but certainly anywhere else you can't. So if you're not really being proactive and using that time value of money, decades where you're putting away, even if it's not large amounts, if you have the decades to do it, you're putting away smaller amounts, you're doing something and you have that compounding and it's growing and it's tax deferred, meaning that it's not eroded by taxes every single year, then you've got a fighting chance. For the people who don't save, they certainly need those catch-ups because someone who's young, who's saving a smaller amount, will have more money at the end than someone who just, at 55 said, oh dear, I better kick in, I better start getting serious. And they start putting in amounts like even 3 or 4 or 5 times as much as that younger person because it's just that time value of money. It's one thing if you have decades to put the money away, but when you have a shorter time span, you really can't ride out the market that well. Because if we have another quote unquote 2008, we certainly had a economic crash there. Even after September 11th, everyone saw their accounts drop to half. And again, that's just the market responding to life events or political events or other things. But the point is, if you're retired and suddenly your account is half of what it was, you don't have the time to recover. Even if you're near retirement, you don't have the time to recover. And that's scary.
Absolutely. I know that most of the information technology professionals that I'm aware of do their own taxes. Mm-hmm. They will pull up one of the free or not so free online tax forms and fill in the blanks, but they make good money. And we from the East Coast know what good money means. And, I don't think they're taking advantage or are aware of what they could take advantage of regarding protecting themselves.
I agree.
What do you think? I mean, I know we could say that they should, go to an accountant, but even that is not that easy to find a good person.
Right. Well, there's a lot of things there. It's got to be someone who fits. You have to click or else it just doesn't work. And picking a tax professional is not easy. It's like picking anybody else. You just have to have the one that works with you well. So when we do, my whole thing is, I'm not saying don't use tax software because this is what I do. My problem with tax software is if we sit down once a year, that doesn't make us, that doesn't bring us anywhere closer to knowing what were the tax law changes, what should I be aware of, what actually pertains to me, what else can I do. When we have these generic packages, it might be the right answers for, Jim, Lisa, and Don, but maybe it's not for the 50 other people, right? Because it could be situations that yours is just different, and this box software can't handle everything. Personally, I think it's fine for someone who's 24 with one W-2 and $4 of bank interest. When you start getting into complex things, and IT professionals, many of them get restricted stock units. Maybe they get other types of compensation from their employer. It becomes a difficult thing to deal with because the reporting requirements are tough, and someone might not understand how to do them. Also, this is a global world. We have many people who are from overseas that live here and work here. Same thing on the other side. We have many U.S. people who take jobs in countries outside of the U.S. When we have overseas accounts, it is not a problem having them. It is a very serious problem if they're not reported, because then you have unreported foreign bank accounts and you are subject to huge penalties. There's a very good possibility of civil and criminal charges as well. And if your answer is, well, I did it online, or I asked the box and it didn't talk back to me and tell me, no, I should have done this, it's not a good place to be. The IRS calls a lot of this situation called willful blindness. And what they mean is that we're not going to give you any consideration because you should have known. You should have educated yourself. And that's a really tough thing. I should have known. Well, one can't know everything. I don't know everything. No one can know everything in the world, but there are things that they feel that, hey, if you have these situations, you should have learned about it and made these known to someone so you can get the help you need, then get a professional if you don't know. So I spend a lot of time fixing these situations and getting people through amnesty programs. And, my job is to protect my clients. My job is to fight to the death to make sure that they're okay. But it's it could have been easier if they just weren't, hey, this is easy. Like I have people say, it's easy, I could do this. Oh, really? So when not only am I credentialed, I have a federal license, but I do 100 plus hours of continuing ed, and I teach to other practitioners. If you're going to say you sit down in front of a computer and put some numbers in boxes and compare that to what I do, sorry, it's not a fight. It's not even a fair fight. Because
no, I got that. Yeah. I got that. So for our listeners, Abby's Twitter name is Abby, ABBY, Choice Tax. That's ABBY, Choice, CHOICETAX. And her email address currently is abby@reallifetaxadvice.com. And I'm going to spell it because there's no funky spelling here, but I'm just going to spell it all out. Real Life Tax Advice, RealLifeTaxAdvice. And keep that handy because I'm going to talk about a free gift that you're going to be able to get at the end of the show using that email address. So we're looking at the overseas and the this and the that. Years ago when I was dealing with corporations, the small corporations, they would have to start planning like January 1 of the following year for their taxes. Yep. But would you say the same thing is true for individuals who have a job? Start in January or come to you or someone like you in August or September?
Well, the time to start looking for a professional and interviewing someone and see if it's a good fit is definitely not in March and April, because anybody good.
Oh, God, no. Yeah.
It's not going to happen. And everyone has different practices. I know practitioners that April 16th, they're gone and you can't find them.
Oh.
I have a year-round practice, so we don't quite work like that. But there are a lot of people who, hey, I do this for 4 months and that's all I do. And, sadly, not all practitioners are the same. So even people who have credentials, some of them don't do as much as education as they should, and some aren't up on these things. When I teach to other professionals, and I have a room full of people, and I'm teaching, for example, I do a lot of the work in the foreign arena, and we talk about FBAR and FATCA and all those things that we need to be mindful of. And it's easy to get there, and we'll talk about how that happens. But when I have a room full of professionals and it's the first time they're hearing this, and I say, you are not asking your clients these questions, I mean, I'm hyperventilating. So certainly there are people who of different skill levels out there. You want to make sure that you give your full story to the tax professional and that person understands what they need to do. Because you can have an account with, grandma back home in the old country. How normal is that? You might have a parent or a grandparent and they say, listen, if anything happens to me, you come over and you have access to the money. That's normal. That happens in every family. It happens in the U.S. It happens in any other country. The problem is that even if it's not your account, even if you don't have, you're not the one moving the funds around or doing anything like that, the very fact that you can act as an agent or a nominee or you can get at that money, you have an interest in it or the ability to have signature authority and move that makes that account reportable.
Oh.
It's not taxable. It could potentially not be taxable, but just the mere fact of not reporting it, that's where the danger is. Because if you check on the tax return, there is a question, do you have an account overseas?
Oh.
And if you answer no, you've just committed perjury. Isn't that fun?
Oh, my goodness.
So you have a perjury charge before you even turn the corner. And then when we don't put things down and we get over certain thresholds, we have penalties of $10,000 for this thing, $100,000 for that thing. These to me are unnecessary places to be. Let's put it that way. I dig clients out of these problems every day. I always say it would have been so much cheaper and easier to just get it right from the get-go.
So if people want to contact you and hire you, is that a possibility?
Yes, we do a large amount of remote work because we have clients all over the world. So not just all over the U.S., just globally all over. And we use secure email, and we're really big on security because this is an area of identity theft is rampant now, and the IRS can't even deal with it. It's out of control. But we have security, and we have a lot of things in place that I feel really puts us in, ahead of many other companies. And my company is Choice Tax Solutions, Inc. And our website is www.choice-tax.com. And if anyone needs tax help, we can certainly assist wherever you are.
And a reminder to our listeners, her Twitter name is Abby Choice Tax, ABBY Choice, CHOICETAX. And her email is abby@reallifetaxadvice.com. And I will strongly suggest that you email her, even if you don't necessarily need her tax help, but you will be on the list to get her free book, 101 Ways to Stay Off the IRS Radar, which will be launching in January 2017. What I want to cover is some lesson that you've learned or advice that has stuck with you, because this is how we all thrive in life, by something they remember that they're dealing with in their work, and they go, that's important to me. So what advice has stuck with you?
Well, I think it's super important to educate yourself because this is your money, right? This is your money. And even if you work with a tax professional, at the end of the day, you're signing that tax return. So while you might say, I have a full-time job, I do not have time to start learning tax law and dealing with all these things, that's fine. But there's at least a certain base level of education that you deserve to really have, and it doesn't take long to get at least a skeleton idea of what you are supposed to be reporting and a little bit about your tax situation. And even if you want to do it yourself, I would strongly suggest it's a good idea to even, again, off season, sit down and meet with a tax professional, because if you can't read your tax return, if you don't understand what's on it and what it all means, then you're never going to get control of your money. And that's that to me is the worst place to be. You work hard. It's your money. You have to come up with intelligent ways to keep it, not give it to the IRS unnecessarily, and not waste it because, in this day and age, it's harder and harder to come by.
Absolutely. Well, listeners, Abby Choice Tax is her Twitter name. Don't forget to send an email to abby@reallifetaxadvice.com, and you will be put on a list to receive a free copy for a brief period of time in January of 101 Ways to Stay Off the IRS Radar. And if you have any questions for Abby, you can get her at that email address or at her Twitter account. And Abby, this has been wonderful, informative, and I hope people listen and take advantage of your skills, talents, and generosity because you've given a great deal of information. So any last words?
Not that I can think of other than have fabulous holidays. Pull out those pay stubs and take a good look and make sure everything is in line for where it needs to be. And don't overspend on those holiday gifts because there's still time to fund those IRAs.
Absolutely. Thank you so much, Abby Eisenkraft.
Thank you.
I hope you enjoyed this episode of the Sanity Project podcast. Please go to AskJoanneVictoria.com and continue the conversation on my podcast page. And get a free copy of my book, The True Self Handbook, a guide to transform your life. That's AskJoanneVictoria.com. Take care, and thanks for being here.